a market update for Tippecanoe County, Lafayette and West Lafayette in December of 2024. First off, we're going to look at average daily inventory. And this is a number that tells us how many homes were for sale each day of the month. And we can see the headline here, 214. Let's come over and look at the graph. And we're basically at the top of a hill that we've been climbing since February of last year. January, February is pretty much always the low point of the year. You can really tie it to the weather outside. And it has grown from a low of about 104. Slow, steady moves month over month over month. No giant spikes, just small gains month over month. So now we're sitting at 214. That is an 8% month over month growth. And most importantly, it's 26% year over year. What does that number tell us? That's really good, right? More houses on the market is good? Yes and no. This tells us a few things. First off, in a balanced market here in Tippecanoe County, we should have about 300 homes for sale at any given time. And that is for a balanced market. So buyers don't have an advantage, sellers don't have an advantage. So at 214, what is it? It's a seller's market. Sellers still have the advantage. Maybe not quite what they did over the last few years, but they still hold the upper hand. There is still not enough inventory out there. That growing inventory is also a sign of two things, I think, and we'll see if the numbers bear this out. One, more houses entering the market. This is good. We need more houses to sell. People need homes to live in all of the time. People get married, people have babies, people move, people get new jobs, people downsize. There are an endless number of reasons that people have to move. And then there are the people that enjoy and want to move as well. So that is good. I don't think that it's entirely just new homes coming on the market, though. It is also homes staying slightly longer on the market. And we'll get into average and median days on market as we get through these. But I think homes are hanging out a little longer on the market. And that can be good and bad. I think in the short term right now, I think that is more good than bad. But let's go ahead and look at our next chart. New listings by date. So we can see that we had 135 new listings in the month of November. That's actually a decline month over month of minus 19%. But what did I just say? The real estate market is really tied to the weather and to the seasons. We've really hit our peak. June, July should have been the peak. If we actually look at this, the peak of new listings was actually in April and May of this year. I would expect this number to trend down. Down 19% month over month. That's fine. We're up 8% year over year. We should probably be up a little higher than plus 8%, but that is not bad. So this is number of new listings entering the market every month, and it was 135. Now you can see, if you can read this on your screen, this is data that comes from the Indiana Association of Realtors, that their data analysis team, and I've spoken to them in quite some detail about their numbers, and I say, oh, these are realtors, and they're no, these are actual data analysts that are looking at this raw data and analyzing it and using proper data analysis techniques. They've got an expected range of 149 to 166 based on the previous months. So last month was 167. So they were expecting a decline, but not quite the amount of decline that we got. So does that mean anything negative? No, the numbers are small enough The individual numbers are small enough, when you're talking about 135 versus 155 versus 1,300 and 1,500. The numbers are small enough that just a couple of numbers difference makes a large percentage difference. So I'm not too concerned about that. Moving on, closed sales. This is transactions that got all the way to the closing table. You signed your name a whole bunch of times. Congratulations, you own a new home, or congratulations, you sold your home and you're not responsible for it anymore. It was 125 in November, down 20%, 19% month over month. And again, this is kind of the same thing as the last number. The expected range was a little bit higher. The decline was a little more than the analysis suggested it might be. And we're down 7% year over year. Not as many sales in November 2024 as there were in November of 2023. But what's the difference? Well, we sold 125 this year, sold 135 last year. So a difference of 10, not a huge numerical difference. Again, what I was saying, that a small number can make a large percentage difference. Again, expected, I'd like to see a few more sales, but I think that overall the market is still strong. And we're going to put all this together at the end to talk about what all these numbers mean together. We're just delving into the details of each chart and number, and then we'll tell the story together at the end. New pending contracts. This is, hey, I saw the house. I'm going to write an offer on it. Congratulations, I've accepted your offer. The seller's accepted your offer. Now let's start the clock ticking to get to the closing table. So new pending contracts. Accepted offers. 116 this year, November of 2024. We are down 17%. Again, double, not quite double, but quite a bit over what the expected dip was. And we're up 1%. So basically we're right on par with last year. So I think the winter is going to be basically right on par with last winter is what we're seeing here. Median days on market. If you have watched almost any of my real estate videos, you have probably heard me talk about median days on market. In the chat, raise your hand if you've heard me talk about median days on market. If you're watching this video later, leave a comment down below and let me know how many times you think you've heard me talk about median days on market. This is the number of days that your house takes from listing to pending. And it's the median. So if 100 homes went to pending in the month, the median would be the 50th house. So so it's the halfway point. It's not the mean, which is the average that we normally think of, where you total everything up and then divide by the number of things that you totaled up. This is the halfway number. And this is because if you have a whole bunch of $300,000 sales and you have $1 million sale, that $1 million sale is going to drag the average up. And it doesn't really, but that's not the entire market. That's an outlier. So that's one of the reasons that I really, really like medians. 13 days in November, an expected range of 12 to 15. No change whatsoever over the last month. Look at that. Dead flat on the graph. And we're up 62% year over year. Last year at this point, it was a number that I don't see right now. But we'll see that in December of last year, it was at about 12. Why is this an important number? Well, let's look at this graph and let's come back to the low point, which is April or July. Let's see, April it was 4, July it was 4. So the low point for the year across all of the county, Tippecanoe County, that's Lafayette and West Lafayette, and all of unincorporated Tippecanoe County, including Battleground and all of the places that are not Lafayette and West Lafayette. Median days on market. If you put your house for sale on a Monday, it takes 4 days to get an accepted offer. Monday, Tuesday, Wednesday, Thursday. That means if you're looking for a house and it comes on the market, you got to go look on Monday. And then you got to start considering and putting an offer together by Tuesday. You really need to be dotting I's and crossing T's on Wednesday so that you've got it submitted no later than Thursday. That's really, really fast. What if other homes come on the market that you need to compare them to? What if you're not quite sure and you need to take a second look? What if somebody's out of town and you need them to come in and look at the house? 4 days doesn't give you a lot of time to act. And in parts of the county, in the West Lafayette School Corporation, that number was 2 and 3. So on a Friday, you were sold by Sunday. So why is a longer median days on market good? Well, now we're out here at 13. Well, if you're a seller, that means it takes you a little bit longer to get your house sold. A little bit longer. I mean, 3 times as long from when it was 4. But from the buyer's side, that gives them a lot more time. That gives the buyer a lot more time to really consider the home, to make sure it's the one that they want. And then that way, if they make an offer and it's accepted, and then they get to inspection and they just decide, it wasn't the house for me, I'm going to walk away. Yes, I might lose my earnest money, but I just want to find the right house. Having those extra days at the top is going to prevent some amount of that from happening. And I think that's a very, very good thing. A normal number, an average number, should be in the 25 to 30 range. So we're not even in a neutral market here as far as that is concerned as yet. 13 is a lot more, but it's not everything that it should be. Moving on, months of inventory. I believe the number is 3 months for balanced market, and this is if no other houses came on the market, how long would it take to sell the inventory that we currently have? And you can see the current number for November of 24 was 1.7, and we're actually a little bit higher than the expectations. We're up 33% month over month, and we're 36% year over year. And let's look down here at the graph. Look, we're here. It did definitely spike in September at 2 months of inventory. What was going on here? There was a rate cut. You remember all of that? The Fed talking about rate cuts, and everybody's like, are they going to make a rate cut? Are they not going to make a rate cut? And in the week leading up to the rate cut, there was a lot of, somebody thinks they're going to make a 1/4 point. No, I think they're going to make 1/2 point. And then it wound up being a 1/2 point rate cut. And then that rate cut wound up not having the effect on the mortgage market that everybody thought it was going to have. And by everybody, I mean pundits and those who don't really understand. Yeah, that's what was going on here. There was a 2 to 3 week cooling off period leading up to that. And there was a 2 to 3 week period where everybody was digesting that data after it happened. And what did interest rates do? Well, they went down by 1/2, 3/4 of a point in the mortgage market for, I don't know, about a blink of an eye. And now they've been sitting around 7% nationally. And the consensus is that's really where they're kind of going to hang out. So that this big spike almost to 2 really kind of correlates with that time frame. And it also correlates with the number of homes that are taking a little bit longer to sell, means that the total inventory is going up. So new homes continue to come on the market while the ones that came on the market 7 days ago are still on the market, and they have another 6 days to go before they sell. So I think that's a sign of actually an improving, healthy market. We don't want such anemic numbers that we don't have enough houses to sell, and that's what really compresses all the numbers down to baseline, not even baseline, but down to 0. By baseline, I mean like the bottom of the graph. So that is a good thing overall. Moving on to median sales price. Don't try to time the market is the takeaway from this. I'll give you the takeaway before we even talk about the numbers. In November of 2024, it was $303,500. And the expected range was between 302 and 320. So we were just in range. We're actually slightly down month over month, minus 2% from last month, but we're up 15% year over year. It spiked a bit in July at 325, but it's been hovering in the 3 to 320 range, 3 to 305 range ever since then. And that's kind of where it's been hovering all year. So slowly trending up. Story that I tell all the time is your home is not an investment. It's not a stock or a bond. But let's not kid ourselves. Your home is an investment. You're going to buy a home for $200,000, $250,000, $250,000, $300,000. And if that's the median sales price at 303, that means that there's a home that sells for 606, and even more than that, because this is medians, not means. It is a sizable investment. When you buy your home, it will go up in value almost 100% of the time. The problem is profit taking. You can't. I mean, yes, you can. You can take HELOCs. There are such things as reverse mortgages, which I think are absolutely terrible. You can get value out of your home investment, but it's not the same thing as profit taking from an investment portfolio by any means. But let's assume that your $200,000 house increased to a $300,000 house in the time that you lived there, and now you need to sell it. You're going to sell it for $300,000. Yay! We made $100,000. Well, guess what? The next home that you're going to move into might cost you $250,000, $280,000, even the same $300,000. So you're not making $100,000. Hopefully you're not losing money. However, if you're going to a bigger house, you would probably have to have gotten a mortgage anyway. But if you're downsizing, this really holds true, where I see a lot of people that want to sell the big family house. I mean, it's kind of the definition of downsizing, right? And then, they think they're going to take the profits and buy their smaller house, and they do. But they don't quite have the nest egg put away that perhaps we might have calculated 10, 15, 20 years ago. So don't wait for prices to come down. Everybody's like, Geoff, when should I buy? When's the market going to crash? Real estate is intensely local. It is hyper local. And you can read all sorts of things about the real estate market in America. But the real estate market in Lafayette and West Lafayette in Tippecanoe County is strong, shows every sign of remaining strong for the short term and for the long term. There are no guarantees in life, of course, but we have a strong academic sector with Purdue University. We have strong local schools, high schools, middle schools, elementary schools, Tippecanoe School Corporation, the West Lafayette School Corporation, even the Lafayette School Corporation that people want their kids to be in. We have a strong manufacturing base of both old line manufacturers and new high-tech manufacturers. We have Nanshan making aluminum. We have GE and Rolls-Royce making jet engines. We have a SK Hynix chip lab that is under development in West Lafayette that is going to bring billions of dollars worth of investment to the area. We have Caterpillar building engines. We have Subaru building four-wheel drive cars. We just have such a strong manufacturing sector that our local economy, our regional economy is strong. House prices are not in danger of going down anytime soon, if ever, here in the Lafayette area. So don't try to time the market. It's not going to happen here. Next up, sales price as percent of listing price. This is, did you get your asking price when you sold your house? Pretty simple. November, 96.7%, down 1% month over month, and neutral year over year. And the 100% line is this line right here. We never quite hit 100. We spiked at 99.2, and our low back in January was 96.5, and we're sitting at 96.7 right now. So 3.3% lower than asking price. That is simply accounted for in buyers asking sellers for closing credits. 3%. That's all that is. So people aren't going, hey, your $300,000 house is vastly overpriced. I want to buy it for $270, 10% off. Hey, I want to offer $200,000 on a $300,000 house, 33% off. Nope. People price their houses properly. If you're working with a real estate broker like myself, our job is to make sure that your house is priced properly. And I'm a data nerd. I love delving into the values of homes and figuring out what they are worth based on homes on the same street, in the same neighborhood, in the same school, in the same school district, in the same town, in the county, in the state, and providing you all of those numbers and that guidance as to what your house is worth. And I'm not the only one, of course. but I love doing that. And the best way to get a house sold is to get it priced properly. So buyers, if you think you're going to come in and make a lowball offer, this data right here shows that you are absolutely wrong on that. 96.7%, almost 100% asking price. Again, that's closing cost concessions is all that that is right there. And that brings us to putting the entire story together. How is the housing market here in Lafayette and West Lafayette? Well, we've gone through a whole lot of numbers. I've told you a whole lot of things. We've gone in depth on those numbers. And the short answer is that the housing market is strong. If you put your house on the market, it's going to sell in less than 2 weeks. If you want to buy a house, you have to offer basically full asking price. If you want to buy a house, there are still not enough of them on the market, so you still have to move pretty quickly. There are more new builds coming on the market here in Tippecanoe County, in Lafayette and West Lafayette, and we're going to delve into some of those new builds in the coming weeks and months to start off the new year. But even with those new builds on the market, there still is just not enough inventory out there, and prices are continuing to appreciate month over month is what this story is saying. So that's your monthly market update for the greater Lafayette area. If you're interested in home here in the greater Lafayette area, I'd love to be your local Lafayette real estate resource of choice. Please reach out to me. Go to thelafayettereal.com/YouTube and let me know how I can help you find home here in the Lafayette area.